Good evening, everyone. Can you guys hear me? We have about 1,600 here. Let's see. Let me see if I can record this. I'm trying to use my assistant though. Let me see if I can record this. I can also, you know, share my screen. And I want to record this and share my screen as well. Okay, I think this is working now. Share screen. Okay, it's recording already. I hope you all can see my screen. Let me be sure you all can see my screen. Okay, I think everything is clear now. So, welcome to Trading Arena, everyone. I notice we have few new members here. So yeah, welcome everyone. Welcome and welcome. So what we're going to be doing today is very simple. First, we'll be doing a breakdown of the charts, which is we'll be looking into some trades that we're supposed to take that we missed, and just highlight one or two couple of mistakes. We're all humans here, we make mistakes, so just highlight one or two couple of mistakes here. But quick introduction: this is Trading Arena, and as you all know, I'm the founder, I'm the owner. It's mine. I'm not sharing it with anybody. We call it Trading Arena because this is where um, we show the unbelievers what trading actually looks like. All right, this is where we show the unbelievers what trading actually looks like. Whenever you see them doubt online and be like, yo, trading, all these traders are not making money, they are doing this, they are doing that, you just tell them, go to Trading Arena and see for yourself. And don't get me wrong, I'm not perfect. There will be losses. As you can see, this month we've had like two, right? But why is it that I am very, very confident that I'm still going to end the month in profits? I'll be sharing it here today. That's how simple, and that's how simple trading is. Trading is not easy, yeah, but trading is simple. And when you understand how simple trading is, you are not going to be thinking too much, right? You're not going to be thinking too much. Example: if you join this channel in January and you've been risking $1,000 per trade on every single trade I dropped on this channel, right? Let's just say for instance here. Okay, let me just use with our run from February to April. February to April, we had a total of 11 wins and I think 12 wins and 2 losses. And the losses came in April, which means February, no loss, March, no loss. Then April, we had 2 losses, 2 wins. Now, let's use that for example. If you are risking $1,000 per trade, and let's say the minimum RR on those trades, that's the minimum risk to reward. Somebody is asking me what. Sorry, somebody is asking me what is RR. It's crazy, not crazy, Sha. Let's just say funny, because I made this very very clear last month, right? I said, if you don't really know the basics in trading, please don't trade. All right. If you know you cannot calculate risk, don't do what? Don't trade. I will explain everything about risk to reward. I'll try to make this session as short as possible. All right. I'll try to make this session as short as possible. So I will explain this RR thing as well. But first, let's look into the charts, right? Should we look into the chart or should I do the risk management part first? Well, let's look into the chart first. All right. Let's look into the chart. Well, next week I will be looking at, we have this and a couple of setups that we are looking at, right? So I'll be looking at this EUR NZD trade. I'll be looking at this EUR NZD trade, and as you can see right here, price has actually been bullish from this point. Excuse me. As you can see right here, price has actually been bullish. Then we have this swing leg from this low to this particular high. And then you can see this pullback into discount levels, and there is what a momentum shift around this point. So price has actually changed from this point here, shifted this momentum from this bearish one to a bullish one. All right. So this is the last low we want to actually work with, this extreme low, and it has a very nice trap for traders right here, which is like the inducement. It's practically everything I'm looking for on a particular setup, right? But I said wait for my confirmation. Why? I want price to come into this level, give me my preferred confirmation. If you don't know what confirmation is, go to YouTube, type Kelvin Talents. You will see my YouTube channel. Go to my videos, you will see where I explained confirmation entry. There are different types, but I explained only the fractal confirmation on YouTube. There are different types of confirmation. We have candlestick confirmations, we have the fractal confirmation, we have the liquidity confirmation as well. There are different types of confirmation, right? But on my YouTube, I explained the most popular and easiest one, which is the fractal confirmation, where price is going to show you an intent that it wants to actually buy or sell from a particular level, right? So that is what I'm actually looking at on this EUR NZD. Then we have what's it called? We have gold, and this particular gold. Now we have gold. Now I'm very, very skeptical about gold. Why? Structurally, gold is bullish, and whatever has been happening here since, should I say, this is since February, is actually happening inside this particular range, inside this particular low and this particular high. Price has already tapped into discounts, right? And we're supposed to be seeing new legs to what? To the upside from this level. So from this particular low, we should be seeing new legs towards the upside. But of course, the market is not going to just start moving, giving you that clean price action. There's going to be some choppy price action to frustrate you and at the same time take liquidity. They will just engineer liquidity, create liquidity. You start thinking price wants to sell, you sell with it. You start thinking price wants to buy. But at the end of the day, you will end up seeing price give you what? This low, this high, this low, and this high. It has happened multiple times, and I've caught it multiple times. Those that have been following me since day one, you can go at me. I like, well, if I'm showing you evidence, I like telling you to go and do a verify. Any trade I'm actually using as an example here is actually a trade I've actually taken, and I called it what? I called it live. What I mean I called it live, it means I posted it. Everybody made money from it. I did not just go to my backyard, cooked up a setup, then come in front of you guys to form a lane. If I lose, you will see the loss. If I win, you will see it. I'm not creating illusion right here. Okay. So this particular, I think this is 2023. Let me move from 2024. Yes. Let's move from 2024. Let me use the H4 time frame. So you see what I'm looking at on gold and why gold should actually continue in that particular direction. Okay. First of all, we have this. If you check my Twitter handle 2024, I dropped this particular setup. We have the swing low. Not just my Twitter handle. Some of my YouTube videos, I also used this setup as example, right? We have this swing low and this particular swing guy. This is the break of structure right here. You can see price pull back into discount levels around here. And I was using what? I used this extreme low that actually swept liquidity. It was an inducement and a fair value gap to attract price into the point of interest. And you can see what price did right here. Tapped into it. And where did we target? We targeted what? The highs. From this sell to the buy, we targeted everything right here. And that was why people started calling me King of Good in 2023, 2024. This setup, it was posted live. Now you see how this happens. There is something I say every time, yeah? Price always repeats itself, right? It always moves in that circle where you see price pull back into discount. It might move in different forms, but at the end of the day, if the price is bullish, the direction still remains the same. The problem with a lot of traders is what? Entries, right? The direction still remains the same. And with market structure, proper understanding of market structure alone, you can easily understand the direction of the markets. What is left for you is, where am I entering from? Where should I take the trade from, right? Well, after this one, then I dropped this particular one. I think it's this one around. Is it this? Let me see. Okay, this one here. This particular one. A lot of people were skeptical. Why? Because this particular one here was from the extreme point of interest. So when you actually see this, it's giving you the same pattern, right? It's giving you the same pattern. We have the extreme low, then we have this particular area as inducement and all. Although this inducement is actually quite far from the point of interest, we have this extreme low, we have the inducement and all. But there is something you need to understand when studying. You need to understand what, as you understand, then as you're studying here, you are trying to understand what price is doing at that particular moment. And when you look here, what has gold been doing before this particular move? What has gold been doing? You can see how gold has been reacting from mitigation blocks right here. You can see how gold has been reacting from what? Mitigation areas. This one missed entry. Look at this. Clean. Look at this one again. Clean. This is not one. This is not two. This is not three. This is 4 times, right? You can get it as multiple times as possible. You can see this right here. What is it doing? Now, let's say I am somebody that don't study. I wake up one day and I'm like, this is the break of structure. Since my last trade moved from extreme point of interest, let me also use this one. Yeah, it triggered. Then fine. This next one, let me also use this extreme. What happened? Price missed it. Where did price react from? This particular mitigation area, right? The next one, let's say I was still not paying attention and I decided to use this extreme points, right? But where did price react from? The mitigation block. What happened? It ignored this extreme. Okay, fine. The next structure, which is this low that gave us this particular eye, let me say I'm marking this area. And when you look closely, you will see that all these other blocks, most of these other blocks are actually very, very good. Look at this one. It's swept liquidity and it's actually looking very, very nice, right? But price also did what? Ignored it. Then you say, fine, this next one is going to do well. Let me use this other block here that sweeps liquidity, as you can see. And it has an inducement here. But what did price do? Price still ignored it, reacted from what? Mitigation block. So at the end of the day, you've had 1, 2, 3, 4, 5, 6 missed entries. You start getting frustrated and start asking yourself, it's like it's not working. It's not about whether it is working or not. It's still working in different forms. You understand? It's still working in different forms, in different approach and all. So you just need to understand what price is doing. Price is still creating inducements. It keeps taking it out and it's still mitigating what? Point of interest. But at that particular point, which point of interest is price actually, is this particular pair actually working with? You can see multiple mitigation and breaker blocks. And guess what? It is not going to be the same with other pairs, which is why any pair you want to study, any pair you want to actually trade with on your watch list should be a pair you've actually studied. Understand how that particular pair move. Then you understand your approach towards that particular pair for that month or that week, depending. All right. So as you can see, we have another block right here. Look at what price did right here. This is the H4 time frame. I don't want to go down to the 1 hour time frame to start breaking it right now. So at the end of the day, we have this extreme low again. With the lessons you've gotten from 1, 2, 3, 4, 5, 6, you should actually understand that price might actually do what? Ignore this, right? Price might actually do what? Ignore this. And what do we have here? We have a breaker level here. We have a breaker block level here, which price actually swept. And when you look, you see a fair value gap here for price to fill, and it's also close what? There's an inducement here. Why? Most traders want to actually buy from this low or buy from this low. And look at how price took them all out. Use them as liquidity, fills this gap, tap into this particular breaker block. And but when I dropped this trade, when I dropped this chart last year, April, a lot of people were saying you are going to hit stop loss. I did not delete my tweets. The trade is still there. In fact, after this class, I will send you guys the link. I dropped this like this before price mitigated it live. Where did I target? Next eye. And what the price? Look how price came back down. And most people are now saying I was using Juju of India. If you remember the time when Juju of India was raining, it was because of this kind of precision. Then we had what? This particular one. Look at what price did again. What happened? It ignored the loop. Okay, reacted from here. This particular breaker. You can see an engineer liquidity right here where price tapped into this level. I've explained the engineer liquidity on YouTube. You can go there and watch it. It's free. The last low close to your point of interest, which price actually pointed close to your point of interest before what? Before the last mitigation or before the final mitigation and price start moving. And I think this trade was between May last year and June, which was I was very, very optimistic about May and June. Because last year, May and June, we had almost 7 to 8 trades on gold back to back on this Telegram channel. And all of them were just hitting TPs. Go and verify. Check the channel. It is there. It is still there. So we had this. And how did we get this? The same idea from here. We ignore the extreme because we expect price to do what? We expect this particular breaker, especially when the breakers are what? Are inside the premium or discount levels, depending on the structure. So in this bullish structure, we are looking at what? We are looking at price tapping into the discount levels before we start looking for what? Our buy area. Here's my gun box. Excuse me. Okay, so we have this. So when you measure this from this high to this low, you can see that this particular breaker block is actually inside the discounted level, which is the areas where the big guys, the institutions will like to do what? Buy. Nobody wants to buy something when it is expensive. They want to buy when it is low. I've used this illustration one time. There was a time dollar was around naira to dollar rate was around what's it called? 1,700. Then overnight it dropped down to 1,100. What do you think happened? The banks forced that price down. If possible, it's even Nigeria that did that manipulation so that all these big men can accumulate dollar. So we are buying 1,700 because they were expecting price to move to 2,000. And that is also forex trading, but they were doing it in the live markets, right? They were expecting naira to dollar rates to get towards 2,000 naira per dollar. Price was around 1,700. A lot of people were not buying dollar. They were not buying the top. You understand? But guess what? If you want to buy, make sure you are buying when price is cheap at discount. So when they now forced price down to like 1,100, within 2 days, we saw price back at 1,600. So every single person that bought dollar at 1,100 should be in almost 60 to 70% profits in just 2 days. Imagine investing $10 million in that particular move. In just 2 days, you'll be making about extra $6 to $7 million. You have no idea how much these people make in the industry. We are just like retail traders with our small 100,000, 200,000, 300,000. We are talking about guys that are trading with billions. All right. So let's continue. Right now, I bought from this point, and we are targeting where this new high to give us what? To give us a new high. Why? Because gold is overall bullish. Now, did you see gold just move from here and straight to a new high? No. Look at what happened here. Multiple consolidations. And inside these consolidations, I was able to catch what? At least 5 trades where we have what? This structure. We have this low where price actually filled this particular gap before giving us this particular high right here. And we have this particular area here that price data came back to fill. And if I was buying from this low, where am I targeting this high? Why? This is just what? An internal structure, right? This is just an internal structure. And you can see our price after playing around for some time, we ended up doing what? Getting this particular high, right? But at the end of the day, what did you see? Gold is bullish. You know that price will pull back into discounts and price is going to do or go up. Direction, market structure reveals it all. It is very, very simple. Technically, you can see everything on the chart. Now, the problem is this next swing structure, which is this current one that we're actually working with, where we have this loop that did what? That led to this particular high. Now, all this bearish move we are seeing here on gold, all this bearish move we are seeing here on gold is happening inside this swing leg, inside this bullish swing leg. So overall, gold is still bullish, right? So overall, gold is still what? Bullish. You can catch intraday movements inside this particular area. You can catch intraday movement inside this particular swings, inside this particular substructure. Sorry, inside this particular substructures you can catch intraday movements, But price has actually tapped into discounts, and there's a possibility price can still come back to decide to clear this particular low before the next leg up. But you cannot rule gold to be bearish until what happens? Until price takes out this previous low. Then the overall structure becomes what? Bearish. But as long as this low is still valid, it's still protected, price has not actually invalidated it. This is the next draw on liquidity that we should be looking at, which is this particular high on this major swing leg to give us what? To give us a new high right here. So what am I looking at on gold this week? Or I said this week, next week. So overall, yeah, we have this low. After price taps into discount, this low led to this particular high. So overall, we have this particular swing moving, and we can see these minor structures right inside it. And see these minor structures right inside this. Then this is the last low where price is currently reacting from. And when price reacted from this particular last area, you can see the momentum shift around here, telling you that what price actually wants to respect this area to do it, to buy. Which is why this particular area is a valid area to do what? To go long. Right? So we'll be looking at what? Confirmations. We'll be looking at price to give us what? A very good confirmation before we can do what? Before we can buy. And what kind of confirmation am I looking at? Which is it is yet to actually do that. Now you can see this particular structure here. You can see this particular high that led to this particular low right here on this 15 minutes time frame. You'll need price to take out this particular high. It's just simple fractal confirmation. Price needs to take this high. And when price takes out this high, it can now come back and we're going on the buys. Apart from that one, expect price to just lower and lower. So until I see something like this, I'm not getting in on the trade. That is why sometimes price is going to come into our entry. Most of you will be in my DM. Somebody said they cannot hear me again. Can you guys hear me? Text, send me a DM. Let's see. If you can hear me, let me know in my DM. Can you guys hear me? Okay, loud and clear. Please, if you cannot hear me, then I think it's your network. Others said they can hear me very, very well. So, some of you here, when you see price into our point of interest, we want to see that intense, right? You don't want to rush into it. And guess what? I rushed into GU. And the crazy thing is, I actually posted it on the group. Here's that GBP. Oh, I've even removed it. I actually posted it on the group that I need price to actually do what? To actually take out that previous high for us to be what? For us to actually go in on that trade, right? But then again, you will never see me blame the market that the market did this. Trump did not do anything. The market did not do anything. I was the one that was not paying attention and we lost that particular trade. All right. Now look at GU. First of all, my rule is very, very simple. This particular buy was for a continuation. Okay. This particular buy was for what? A continuation. I was expecting price to respect this minor structure low and all. But but where I wasn't paying attention was to just draw a simple trend line. I was actually at a site overlooking some projects, and I just saw it and I'm like, this is good, this is good. And I took it. Right? Now, one thing about trendline liquidity, just like what I thought on YouTube, one thing about trendline liquidity is this. Pay attention, yeah. Price, let's say this is a trend line. Once you buy here, you're expecting a new high. You buy here, you're expecting a new high. You buy here, expecting a new high. What's happening? Every single person that's buying from this area, their stop losses are below this trend line. Just like I explained on YouTube. Go and watch the video. I don't need to go too deep into this, right? Now, your stop loss are below here. Does not mean it's trend line liquidity yet. No. Price will keep respecting this trend line until there's a breakout. Now, the moment there's a breakout, expect price to take out those particular stop losses, those liquidity there. Expect price to take it out, all of them, till the beginning of the trend line, right? So if you're trying to buy from a point of interest and you notice that for price to mitigate that point of interest, price has to tap into, for price to mitigate that point of interest, price, it's going to lead to a breakout of a trend line. Then that's the part where you actually ignore or run away from that particular point of interest, which is something I actually did not notice, right? Because take away this trend line, this is looking like a very good structure with a breakout structure right here. It's a breakout structure right here. We've got an engineered liquidity right here. Everything is looking perfect, but the story is very, very different. It is telling us that what? We need to take our trend line liquidity. And yeah, my stop loss that was here became what? Liquidity. It's a simple minor mistake. And some people that actually don't really understand what happened, most of them decided to also buy from here. And what happened? Look at it. It will still take it out. Every structural point found within the trend line after a breakout becomes trend line liquidity, and price is going to do or take every single one of them out. And which is what happened here. All right. So, am I looking at GU again? Yes, I'm still looking to take a trade on GU. But first, you have to correlate it with DXY. And looking at DXY, you'll notice that what? Price broke out bullish. It is the direct opposite of what the GU, which is betting against the dollar. Now this is the dollar. So when you see that dollar is actually bullish, you expect what? Bearish moves on those what? Opposite currencies, right? You expect the bearish moves on opposite currencies. So in this particular case, you can see our price broke out and retested in the DXY broke out and retested around this point here, which of course, when you look at this structure, you can see that the dollar is also bullish. Now, this is actually where it gets interesting. This is actually where it gets interesting. From this particular low to this particular high is actually a single leg. And you can see that price actually pulled back into discount, decided to respect this particular area before this breakout. So there's a high chance that price is going to come and fill this void around here that will lead towards a new high. And if that should happen, then EUR/USD will most likely not come back to our entry again. EUR/USD will most likely not come back to our entry again. But if you remember clearly, you will know that at some point, this is the chart I used for my students. You will know that at some point, I actually dropped this particular move on EU, and it's still there. Overall, on the weekly time frame, EU is what? Bearish. You can see it is bearish, and it has tapped into a weekly supply level around here. So whatever it is I'm trying to do here, whatever it is I'm trying to do on this short, is just for a re-entry based on the fact that price has confirmed this particular sell. Where price tapped into this point, gave me a momentum shift here to tell me that I want to sell, all right? So I'm looking at this particular point of interest as a good area for price to do what? To buy. To sell, sorry, from. Yeah? So I will still be expecting a pullback into this area before we do what? Before we sell. But if it doesn't come and the sale continues, we might get we might get what? Let's see, minor entries, yeah. But all those minor entries are scalps. I'm planning on doing something with my scalp trades, which I will announce that one later. I will announce that one later. All right. So the next trade we are actually looking at right now should be what trade was that? No, this one already hit TP. This particular trade failed to. We actually missed this trade. This GBP NZD. We missed this trade. But when you look at the structure, you find out that it's practically the same thing I trade. Just what? The same thing. When I dropped this chart, I was like, we're going to go in on confirmation. I was not expecting price to just snipe into it like this, like it did. But yeah, when you look at it, it's simple. Let me explain this, yeah. When you look at this, you're going to notice that what price was bearish, and we've seen the momentum shift to the upside, right? Now we're expecting price to pull back into discount levels to this particular leg. So if you want to measure, you'll be looking at price to pull back into the discount levels of this particular leg, right? So it is practically against the trend, but that does not do what? That does not tell us that we cannot actually sell, right? So in this case, we have what? We have this momentum shift here, where price actually changed. We have this momentum shift right here, where price actually changed here. And we've got this engineered liquidity around this point. Price did not practically tap into discount levels properly. So I was expecting price to pull back into this area, tap into this point, then sell, which is exactly what happened. I also dropped this chart on the group live, yeah, but I missed it because it was a sniper. I wanted to like use what's it called? Lower time frame confirmation, yeah. But I missed it because so I just tapped into it. It was a sniper entry. Check the Telegram. Just type GBP NZD. You are going to see this chart when I dropped it. All right. When you look at this structure, you understand that the stories all remain the same. Are we at premium? Let's check if price has tapped into discount. If not, if price is bullish, then this is a risky sell. We are going to use what? Confirmation. If price is actually bullish and we are expecting price to tap into discount levels, and that is actually not really that risky, you can also go in with confirmation, or you can just go in aggressively. So in this particular case, this particular setup was a little bit risky because price is actually bullish. I expected price to tap into discount levels first. I expected price to tap into discount levels first. And when you look here, you will see that this almost did. Yes, this almost did. So which was why I was like, let's go with confirmation. We don't want to, get unnecessary stop loss because from this particular low, we might be expecting what a new high. So now that price has actually tapped into this point here, we might still be doing what? We might still be expecting new highs from this particular point. All right. But yeah, tomorrow evening, tonight I'm going to sleep. Tomorrow I will draft setups after studying and we'll drop them on the channel as usual. Then we look into them and we make money from them. I promise you all one thing. I said it and I'm going to say it again. I promise you all one thing, yeah. Take note that whatever it is I'm doing on this channel is not for you. It's for me. What do I mean? My own is to just trade. Anything I drop on my trade, anything I see on my charts, I drop it for you guys. I'm not doing it so that you guys will um, 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 see me as the best or whatever. It's just that I like sharing it live, and that is all. So if I'm losing, I'm the one that is losing money. Last month, last 2 months, each trade where I was risking $20,000, $30,000, I was making 60, 100K. At the end of the month, I was making over 150, 300K across 2 different accounts. This month alone, I've lost $40,000. It is my own loss, not your own loss. I don't know how much you are trading with. This month alone, I've lost $40,000 on 2 trades. It's just minus 2R. Now, let's explain the risk management part, which is what we are going to, use to round up, which is actually the main purpose of this class. That is why I put it at the end. That's why I actually put it at the end so that you guys will wait to the end and we round up. away. Before I will see on Twitter now that Kevin Talent does not know how to spell management. Correct me if I'm wrong, go. I never said I was perfect though. English is not my first language anyway. So, risk management. If first of all, yeah, if you don't understand how to calculate your stop loss and all, don't risk your money. Don't do what? Don't trade. You must know how to calculate your loss and take profits before you do what? Before you trade. And the thing is, some people are lazy. They don't want to put in the work to learn. Earlier this month, I gave you guys like 2 good traders with good track record. Go and learn from them. My own mentorship is closed, yes, but that does not mean I'm the best person out there. There are a lot of people that are good, and I recommended some people to you guys. Go and do what? Learn from them. My own now will be like towards the end of this year. Registration will start like October, November, December. Registration starts then. Students get in. Classes start January 2027 till the end of the year again before I think of doing another one. The only class I do aside Nikhil is my private class, which I've not actually done this year. I've been very, very busy. I'm not somebody that um um will tell you, okay, I want to teach you, and I'll be postponing this thing and be giving you excuses and all, right? Unless there is a reason why I won't be available, except that I hate missing class. So if I know I'm not free, I'm never going to do anything like this thing, private classes and stuff like that. All right. It actually pains me because I've been through that as well. So now risk management. If you don't know how to calculate your stop loss, then you shouldn't be trading. And you can go to YouTube and type how to calculate lot size on YouTube. You will see a lot of traders that are looking for views that explained it. Patronize them. Watch their videos, like it, subscribe. They are teaching you for free just to get views and benefit from it. All right? Go there, watch it. Then you go to you can go to your App Store or Play Store, download position size calculator. All these calculators, they will just show you, put your stop loss pips here, put your how much do you want to risk, put it here. What is your account size? Put it here. What's going to happen? They will give you the exact loss size you are going to use. Simple. Stop loss pips. This is stop loss pips here, 33.0. Now 7.9. You put your stop loss pips. How much is your account? If your account is a $50,000 account, you put it there on the app. How much do you want to risk? If on this trade you want to risk $1,000, you write $1,000 there. They are going to give you the exact loss size you are going to use. It doesn't matter if the stop loss is big or small. If that trade hits stop loss, you are only going to lose $1,000. If this trade is tight and you still calculated to lose $1,000, if that trade it's stop loss, you are still going to do what? You are still going to lose $1,000. If it is big, it's still the same thing. So don't judge people with your stop loss is too tight, your stop loss is too big. No, unless you don't really know how to size your position. All right, unless you don't really know how to size your position. Now pay attention. This is how I drop my trade on the channel. I'm just going to drop the charts, and sometimes I'll just write out the stop loss figures. But I want you to understand how to actually read the charts that I draw. Some people don't even know. I will drop charts that I'm waiting for it to come to entry, something like this. Maybe price is currently like this. Then we have this break of structure right here. And I'm expecting price to come down to this particular entry. Maybe price is still here. Price does not come down to entry yet. Price has not tapped into that point of interest yet. Somebody said my voice is skipping. Is it skipping? It should not be skipping. No, this is the important part of the session because I'm ending it right. I'm ending it soon when I'm done. I hope my voice is not skipping. So I'm expecting price to, let's say I'm expecting price to tap into here and buy. So this is a long setup. This is a buy setup, right? So where is the stop loss? Where is the take profits? You see this hash level here. Trace it. These figures here is the stop loss. This figure here, 0.34 whatever is the stop loss. This is the entry. And this is the take profits. So nobody needs to start writing stop loss 0.8 this thing, entry, take profits. Nobody needs to start doing that. Once you see my chart, look by the side, you are going to see the numbers. This one is in blue because my chart here is in blue. All right. This entry is in black. Why? Because this middle line here is in black. This one is in ash because this one below is what? In ash. I can change the color to yellow. Look at it. All right. So when you see it like this, you know the same thing with cells. When I drop a sell position, the same thing with sell. When I drop a sell position, you have entry, stop loss, take profits. Nobody needs to start writing that down for you. And what this means is, if I drop a position like this for a buy and price has not come into price has not touched it, then of course it is not yet time to buy. Sometimes I'll just drop this thing. Now somebody comes to my DM and be like, "Are we buying now?" Maybe price is still somewhere here. Price has not even come down to the entry, and you start asking, "Are we buying now?" It means you don't have the basic knowledge. You don't need to be trading right now. All right, don't just throw your money away. Use that money. Find somebody to teach you. When you learn from them, then you are good. Some traders on this channel, in fact, on Twitter as a whole, on this page as a whole, some of them are in my channel, and they are not there to take my signals or whatever. Sometimes they're just there. When I drop my bias, they go and check it. If it aligns with theirs, they trade along with it. And that is how it should be. Make sure at some point you have some level of knowledge. Now, when you now have some level of knowledge and you want to take my trade, you want to benefit from my trade, that is when this risk management is important to you. Now, I'm going to be using our live record for this risk management session. Now, let's start with our results and how much should be in our pocket right now. I'm going to start from February. February, we had 4 trades. March, we had 5 trades, all wins. April, we had 4 trades, 2 losses, 2 wins. That is, was it 4 trades? Okay, one was one. That was 13 trades, right? 5 plus 4 plus 2, that is 11 wins. 11 wins. 2 losses. Let me just use this. Okay. I'm going to use this, and I'm also going to use a bad record. So you see, this one now is, I'll call it a good record because you will hardly see traders with this kind of results. Before these 2 losses, we already had 10 straight wins. Go and ask your mentor, anybody. I mean, when was the last time they hit 10 straight wins? All right. So 11 wins, right? Now, let's say minimum of 1 to 2, 1 to 3. I never did 1 to 1. Some of them were just 1 to 2.5, 1 to 3 out. Some were 1 to 4, 1 to 4, and all that. So they were fluctuating, but it was above 1 to 2. Some were 1 to 4 out. Some like 3 or 4 were 1 to 4 out. But let's just do minimum of 1 to 2, 1 to 3. Let's just, since it's between 1 to 2 and 1 to 4, let's do minimum of 1 to 3 out. So minimum risk to reward. This is actually the main session for tonight. Minimum risk to reward 1 to 3 hour. Now let's say you have $100,000 account and you decide to be risking account size $100,000. $100K, and you decide to be risking $1,000 per trade. Risks per trade 1,000. So you're risking risk per trade is what? $1,000. Now we had 11 wins and 2 losses. So since the minimum RR is 1 to 3, some of you don't even understand what RR means. Now let me explain here. Risk to reward means how much are you risking? How much you are risking to how much you are making. So what is your potential risk to your potential reward? So in this case, look closely. Let me explain it to you. Maybe you use it to understand very, very well. In this case, if my trade is big like this is 1-to-1. Look at it here, risk to reward 1-to-1. What does this mean? It means I'm risking $1,000. If my stop loss hits, I'm going to lose $1,000. If my take profit hits, I'm going to do what? I'm going to win. I'm going to get $1,000. That's 1-to-1, right? And our minimum trade is always what? 1-to-3, right? 1-to-3 hour, something like this. That's the minimum. It means I'm always risking 1,000 to make 3,000. So anytime I win, I'm making $3,000. Anytime I lose, I'm making what? I'm losing just 1,000. What does that mean? It means if I win one trade, I'm making $3,000 before I'm going to go back to break even, not loss. Before I'm even going to go back to break even, I need to lose 3 straight trades before I go back to break even. So you should see how simple trading can actually be. You can get 2 losses and just 1 win, and you'll be in good profit. Unless you are trading what? Unless you are trading 1-to-1 and below. 1-to-2 hour, 1-to-3 hour, you can get 2 losses, 2 wins, you still be what? In profit. So let's continue. Now, risk to reward is 1-to-3, and according to this, we have 11 wins, right? So what happened is, first trade was a win, second trade win, third win, fourth win, fifth one too, sixth, seventh, eighth, 9, 10, 11th one, we have a what? L, 12th one, win, 13th one, and L. So this is how it works. Now, every win here, we are making what? $3,000. And every loss here, we are losing $1,000. So how many wins? 11. What you're going to do now is 3,000. That means we won $3,000 11 times. That's how simple it is. 3,000 times 11. Right? That should be 33,000. In total, we made what? $33. What? $1,000. Taking what? The 3 I dropped on this channel from zero. You've made 33,000. And of course, we decided to loss is $1,000, 2 loss $2,000. So which is $2,000, which is $1,000 times 2. How much is $2,000? Doing the $3,000 $1,000 you are risking 1,000. You don't at the end of on this channel. It means you don't know how to manage risk. So this is what it looks like. But guess what? This is how simple it is. But this is on what? This is on my own record, which is exceptional and beautiful. Right? Now I'm going to use an average trader record. So you should see that even an average trader is also profitable. Let me show you. Still using this same, and this thing now is more like an 80% win rate, but I'm going to use like a 40% win rate, and that 40% win rate now should be like the 40% win rate should be like, okay, yes, this was also last month. This is my mistake. Sorry, this is also last month. GBPAUD. Where is it? Thank you. Somebody just reminded me now. I can't remember everything. GBPAUD and L. So minus $3,000. So we should be left with what? 30,000. Sorry. Some of you have watched my YouTube videos to be able to do these calculations yourself too. So we should be what? Upwards $3,000. So that should be 3 GBPAUD. Right? So what do we have here? We have $30,000 at the end of what? At the end of this month. Now we are looking at what? An average. And the average we are looking at now is let's say you took just 10 trades, and inside that 10 trades, your first trade was a loss, second trade loss, third trade win, fourth one you lost, fifth one you won, sixth one you won, seventh one loss, eighth one you lost again, the ninth one you won, 10th one you lost. If your mentor give you this kind of result on Telegram, in fact, if I should give you this kind of result on Telegram in a month, I'm pretty sure all of you will leave the channel because you'll be like, Jesus Christ, what is this? This guy wants to kill us with a loss. Although I don't have this kind of result, sorry. Yeah. I don't have this kind of result. But I'm just saying, right? But let's just say you see traders that post live trades and they give you this kind of results and you're shouting. This is like 40% win rate. This is very, very impressive for an average trader. Yes, this is very, very impressive. And let me show you how. Now, let's say your account size is the same 100,000 and you are risking how much? You are risking $1,000 per trade. This first loss, 1, 2, 3, 4, 5, 6. 6 losses is how much? Minus $6,000. Your account is what? Is minus $6,000 for that month. Then this same trader only won 1, 2, 3, 4 times. And each win is $1,000 times 3. Right? That's 1 to 3 and above. Sometimes he gets 1 to 4, sometimes he gets 1 to 2.5, but we are not looking at that. Cumulatively, we're just saying 1 to 3 per trade. Right? So 3R right now should be first win, second win, third win, fourth win. That's 3 times 4. So we are having what? 3 times 4 is what? He made $3,000 4 times. 3 times 4. That should be what? $12,000. Guess what? You are on the same channel with the guy or with the lady and he made this. Now, if you minus the losses from the wins, you'll be having 12,000 minus $6,000. You'll be having 12,000. Sorry. You'll be having 12,000 minus $6,000. That's what the person will be having extra $6,000. So at the end of the month, the person's account size will be 106,000 as balance. 100 and what? $6,000 as balance. How? Risk management. How many trades? He lost more than he won. He lost 6 and he won only 4 trades that month. Lost 6 trades, but he still end up with $6,000 profits. Let's say broker remove commission and all, blah, 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 and all. He will be still landing around $5,900, $5,800 in profits. Is that not good money? That is good money. Now imagine me that risks $20,000. See, I'm currently down $40,000, right? One trade right now, 1 to 3 hours, I'll be getting $60,000. And you know what that means? The $40,000 loss is gone. My next trade, I'll be getting another 60 to 80,000. And I have like double accounts. I have another account where I'm risking $50,000 per trade. So that is why I am very, very relaxed, because you guys really have no idea. You guys only saw the wins on the Telegram, but you have no idea how much I made this past few months. It doesn't, you see this 3,000, yeah? This 30,000 here. Just add extra 2 zeros to it. Extra 1 zero to it, sorry. That is just one account. I don't risk $1,000 per, sorry. Right? And all these things you are seeing, so we are live wins on the channel. And the money did not disappear. And I've been actively working. Just earlier this week, yeah, I have an hostel in Uniport that is almost done, and the fence fell. Yeah, and they wanted to tell the new students to kind of like contribute money to repair it. But I was in PH for another project, and I decided to stop by there. How much did it cost to fix that fence? It wasn't even up to 10 million, and if shake my account, it's very, very small. That's the possibility of trading. That is something that I wonder whenever people hear of trading, they'll be like, if you hear somebody say trading is, shut up, you don't know what you are talking about. Some of you now, the crazy thing is, you want all these trades with me. You want everything with me. Why my account is breathing heavily? It is my own trade, though. My next trade, I brought out $50,000 again to risk, like I've been risking here. Then instead of you to also bring out the same number of amount, the same amount you are risking, because you've won like 10 straight, your mind is telling you are going to win the 11th one. Then you packed all the profits that you've actually made and put it in the next trade, and you blew it up. If you have been in this channel since January, you should actually be relaxed, because before we are going to lose the amount of money we've actually made this year alone, this is 33. It means we have to lose straight 30 trades for us to be able to lose the money that we've actually made this past few months. That's between February and March. I'm not saying this as a joke. Go to the group, the channel, right? Go and check these wins that I just mentioned. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Before this L, before this win, then before this 2L. Go and check it. And when you check it, you will know that all these things you see happen live. And with your better understanding of risk management, you will also understand that if your account is breathing 30,000, 33,000 minus 3, your account is still breathing 30,000. You should not even be shaking at all. Because for you to lose this particular $30,000 profit, risking just $1,000, it means you need to lose at least 30 good trades. And there is no planet. There is no, if I lose 30 trades, I will close the channel. If I even lose 10 straight trades, I will close 5 straight trades. I might even get angry and be like, no, let me go and chill up. All right. So that is how confident I am in my own skill. Why? Because that's the level where I've actually reached right now. It's the bar I've actually set for myself. I keep raising the bar as high as possible, and it's actually glad that a whole lot of people are also doing what? Coming up with it. This is something we want to see everywhere. Preach the good news of trading to the entire world and let them know that, you see, this trading, if you understand it very, very well, you will know that it is simple. All right? You will know that it is very, very simple, unless you don't really know what you are doing. And when I mean you don't really know what you are doing, it does not end here. It does not end on this chart. It does not end on before and after. When you lost 1, 2, are you still confident enough to take number 3? Ask yourself that question. Are you psychologically stable enough to take the third trade, or will you be scared and run away? When you even take this third one, are you still confident to take this fourth trade? Now, when you win 1, 2, 3, 4, 5, are you still psychologically stable and strong? Not to overreach, not to get greedy and do what? And maintain the same energy and take the next trade with the same defined risks? Or you are going to get overconfident and risk a lot. What if you now lose it? You go back to zero. If you win 2 trades and you lose all of them in 1 trade, you are not supposed to be trading at all. We have over 2,000 people on this call, and bear me witness here, and I'm saying it again. If one loss can wipe out your entire profits, I will advise you, go back to this video when I drop it and rewatch it again. It means you have what? A risk management problem. Okay? So, going into the week, I'll be seeing you guys in the week. I'll drop trades as usual. We make, we lose, I'll drop it. We don't control the market, but we know what we are doing, what we are looking for. And when we say it, we execute fearlessly and we trade with the mindset of what? Of winners. We don't do that with the mindset of winners. Okay? So, based on the giveaway, yes. Based on the giveaway, I have, let me see, how should I do it? First, if you have any question, ask your question. Drop, should I unmute? Should I let people speak? Should I do that? Let me see. If you have a question, drop it in my DM. I'll read 1 or 2. Okay, related to risk management, I have a question. I hear big traders say things like, if I ever go broke, just give me $100 and a laptop. I would bounce back. Make it sound like we are doing something wrong. How do you expect to bounce back with $100 when their whole mentality has been programmed on big amounts? Can you give a step-by-step prep talk on how you will do it if you were the one? God forbid, I will never go back to zero. There's not, God forbid, yeah, but I can never go back to zero. Actually, I'm too rich to go back to zero, right? As the money is coming, unless the ground will open and swallow my houses in different states, swallow my buildings, my investments, and all of them at the same time. Apart from that one, I cannot go back to zero. God forbid, let's say I get hacked, all my money is gone and all. All I just have to do is wait for a day, just a day. I have multiple serviced apartments. Millions will enter. I will go back and trade. It's very, very easy and simple. All right. So the question now is traders that used to be like, if I ever go back to zero, just give me $100 and a laptop. I think maybe you are misunderstanding it. All right. $100 alone can get you a prop account. $100 alone can get you a $10,000 prop account. And a professional trader that has actually been on the top of his game, $10,000 accounts, they can easily, it's very, very easy to pass. Just calm down, lighten it, you pass the accounts, get funded and all. And if it is to trade the $100 and all, if it is their last card, yeah, there's going to be a lot of psychological issues there because nobody wants to start flipping $100 when it's their last $100, right? So if I should have $100 account, $100 right now, I'm getting a prop account. I can get a $5,000 account and trade it. I'm very, very sure that I will be making payout of $200, $300. Give myself time within a year, and we scale up to 100K, 200K, 300K accounts. So yes, give me $100 laptop, I will make it back. The knowledge is there already. How do you deal with psychology after losing streak? Okay. Um, Yesterday, let me use yesterday as an example. My friend Chris recommended one game to me, Assassin's Creed Shadows or whatever. That game is that game has been taking my time and all, right? After yesterday's loss, I went back to the game and I played it for straight 4 hours. All right. After playing it for straight 4 hours, I went outside, looked at my cars, looked at the house that I got. This particular house, it was the profit from June. I think was it June? No, the profit of from August 2024. That was what I used to get this house. This house is already almost 2 years old now. I need to even level up, self. Over 2 years old, and it's already now looking small. Even though I'm the only one staying here, right? So I look at my house, look at my cars. This is my fifth, right? Look at my cars. Go through my gallery. Look at the whole achievements. 100% from trading. Everything relating to trading, yes, 100%. The profits, the everything relating to trading gave me what I have. Yeah. So going into the future now, I've diversified a whole lot of things. So it's very, very simple. I lose a trade now to 20,000, 30,000. It's just like you have 1,000 naira and a beggar begs you for 10 naira. How will you feel if you give the beggar 10 naira out of your $1,000? You won't feel anything. That's why I used to tell people, trade with the amount you are willing to lose. So that when you lose, it's not going to pain you. 20K does not shake me. 30K does not shake, 50K does not shake me. But if I risk $500,000 on a trade and I lose it, I might run mad. Mm-hmm. Why? Everybody has what their own level, their own stage, and all. So right now, $20,000 to me is like I have $1,000 and I'm dropping 20 naira and I'm dropping $20. So it is nothing. It's actually nothing. So yeah, I don't have psychological issues because of losing streak. How do you know a trading system that is working and a strategy that is working? Now, strategy is not working. Why? You don't expect a strategy to work unless you create it yourself. I don't know. Some of you are mistaking technical analysis for strategies. Technical analysis now is more like an approach to the market. There are different ways to analyze the markets technically, fundamentally, even order flow and order. All those things are what approach. They are like tools that you use to do what? Analyze the market. The strategy now is how you use them. There are some people that combine fundamentals with some technical approaches. There are some people that combine order flow with some technical approaches. There are some people that trade pure technical approach and pure technical analysis. And there's a way they blend different technical terms, maybe all these trend lines and blah 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 with liquidity. There's a way they actually joined all of them together to actually get what they are actually trading with. And for you to actually now call it a strategy, it means you have been studying while you are joining them together and you now see results. It is now working. That is when it becomes what? A strategy. It's not that you just wake up and this thing, sorry to say this, but if this is, let me use this as an example. If this is what you are trading, or this SBI, right? This is just a pattern. It is not a strategy. How you analyze the market, how you study the market, how you read the chart before you arrive to this decision, how you actually look at the charts, combine whatever data it is you are combining before you now arrive at this entry, and how you now enter, exit, manage your risks, manage the trade. That is your strategy. And there is no way you are going to know if it is working if you don't actually use it. So how do you know that a strategy is working? Bro, go ahead and execute. Study, practice, execute. That is how you know it is working. I can give you my own roadmap, A to Z. That's how I tell my students. Not even my students, if I told you guys too last year, before you register, some people were like, you dey threaten us. They thought I was joking. The guy that said you dey threaten us, he came this month and he was like, oh, it is not easy. Before NICU 2026 registration started last year, it started November, right? If you go to the channel, you will see where I just type lazy. You will see what I said about it. I said, if you are lazy, don't join NICU 2026. Because if you join my class, you must work. So don't join if you know you cannot work, so that you'll not go out there and give me bad name. And they'll not be like, I learned from Kevin. You do not learn from Kevin Talent, because if you learn from Kevin Talent, both the character and everything, you are going to embody it. And Kevin Talent is not lazy. So you did not learn from Kevin Talent. So before we started the class, I told, if you are lazy, do not join. One guy was like, you dey threaten us. Well, he came this month. He was in my DM and he was like, what I said is true, that this thing is not easy. Because you only have 1 day off between classes, and only the weekends, that's when you are actually free. 1 day off between classes. Before you are even grasping this, I'm already here again. And you must study it. Because if you don't study, you will not understand it. And that's how trading is. It is not just me alone. If you want to learn how to trade, you must trade. You must practice. You cannot just sit down and expect somebody to dump it on your end and you understand it. No, you must have your own experience of the market by yourself. Then how you approach the market and all is what the mentor is going to teach you and all, show you his own approach. And as you are experiencing it, you are crying. And where are you crying to? You are crying to the channel, to the mentorship. And the mentors are now there to correct you and hold you. That's the goal of the mentorship. To correct you. Oh, this is what you did. Why you go buy from yourself? Look at what you did. Look at what you did. All those kind of things. Along the line, you are correcting yourself. Then you become good. Last year, you saw my students. Some of them bought cars. Both the ones in Germany bought cars. The one in Nigeria too. Cars. Some of them different things, different achievements. They did not just sit down and I put it in their head. No, I did not for one day say, okay, take this trade, buy. No, I might just be teaching something like this, and while teaching, we'll see a setup. This is the same thing now that I explained now. Let's just see how it goes. And it is going to go up. Then you will see them, they will put it into practice by themselves. And that was how they are able to achieve whatever it is they achieve. And most of them are still doing what? Are still doing big things. Why? Because they did not relax. They stood up, locked in, and practiced. If you want to be like Kevin Talent or better than Kevin, you must work. After this session today, I have not actually studied this weekend. Tomorrow, I'm still going to study. You must do. You must work. That's why I really need this. I'm really stepping out for some vacations and all, because I need to rest, and I've been grinding for months. My brain and everything need to go and cool down first before I come back. My head is already loading too much. I'm just going to take two more questions. Then I'm going. Which kind of spam is this, sir? Just short explanation. Who is a profitable forex trader? A profitable forex trader is not somebody that has cars and money. Oh. Those ones are rich forex trader. Now me, I'm a rich forex trader. Cars, houses. That does not mean I'm profitable. Anyone can have cars. Anyone can have houses. Another thing can fund your lifestyle, right? Well, yeah, forex funded my lifestyle 100%. But when you see my cars, you see my stuffs. Let's say you are encountering me for the first time. You see my cars and all, and they say you're a forex trader. That does not mean I am a profitable forex trader because you are just seeing me for the first time. No. If you are seeing me for the first time, go and check my work. Who is a profitable trader? A profitable trader is someone that makes consistent profits. Simple. It doesn't matter if you are making $2. It doesn't matter if you are making $10, $20, $50 consistently. I saw there is this guy on Twitter. I've been watching his growth. He actually does not know. I invited him to one of my boat cruise the other day, and it was very, very nice. He actually did not know that I've been watching his growth, and I'm just like impressed. I will surprise him one day. What's that his name again? Luso, right? He has been consistently making $200, $300 from his Profem accounts, different Profem accounts, 25k size, 25k account size, 10k account, $10k account size. Nobody is going to touch that boy tomorrow and be like he's not profitable because he's making 2%, like $600, $700. No, as long as he can do it repeatedly, consistently, and he has been doing it since January, as far as I can remember. I don't know about last year, but as far as I've been watching him, I think February, and he has done multiple payouts. That is a profitable trader. Somebody that can do it repeatedly multiple times over time. 6 months, 1 year, 2 years, you are still consistently, you are there. That is what a profitable trader is. It is not just about how much you have, what's in your bank accounts, and stuff like that. No, it's not about that. Lately, you are going to see some live influencers come into the trading industry. They have the numbers of followers. If somebody like that now just do some corner back this thing, show you guys small chat and be like, you know what, I want to teach people how to make it. Some gullible people that don't know that these people don't know shit are going to do what? Rush to them to pay. Now if that person make some money from that this thing, they show you lifestyle, probably lifestyle they are getting from their normal influencing life. That has to do with maybe all this their web to influencing life. That's to do with all those kind of things. Then they come into the trading and now start saying, I'm a trader, You'll not be like, he's a profitable trader because he has a car on it. No, that is not it. You must show consistent profits. You see the cars, you see the house. These things are now what? Reward of your consistency. After a couple of years, you should be scaling up. You should now start doing what? Acquiring those things because you have consistently do what? Make money. You've consistently scaled up. All right? That is who a profitable trader is. Two more questions and I'm done. Somebody says check my question. Two more questions and I'm done. Can you analyze from the weekly to daily? I cannot do that today again, I beg. I asked, it has popped up. Okay, I've seen it. I want to ask why you wait for confirmation entry and what you look out for before entering. You're probably just joining the call. I explained it earlier in the class why I wait for confirmation entries and the kind of things I actually look for or actually look out for. I actually explained it earlier on in the class. All right. So now for the giveaway, I said I was going to give out cash and I'm also going to give out prop firm. When I was saying it, I was not thinking of how to do it. How do I do this thing now? How do I do it? Okay, let's see. Should I make a post? One thing about giveaways, I don't like choosing random. I don't like picking people. So that it's not going to be like Maybe I know this person before and I pick. I like using this Twitter picker thing where it will just randomly pick people. If it's your luck, randomly, it's going to land on you. I think that's what I'm going to do, right? I think that's what I'm going to. That will be better. I'm going to make a post. Yeah. Either I do that or I make a post about this session, and if you're active on the session, you answer the question I made and probably give you cash, prop firm and all. So the prop firm, maybe I'll just buy like 3 prop firms. I'm buying it. I'll just buy like 5 accounts. Yes, 5 accounts will be good. 5 accounts and the cash. Okay, the cash I'll just pick randomly under my comment section when I make the post. What's the time? Maybe I can still make the post today. Okay, I'll do the post in the morning. In the morning is better. I'll make the post in the morning. The cash, I'll randomly give a lot of people cash. That's it. I'll randomly give a lot of people cash. It's not an issue. While the problem, I will use Twitter picker to pick randomly. All right? I'll use Twitter picker to pick randomly. I think that's how it's going to work. That should be better. Right? So that it's not going to be like I'm favoring one person, I'm not favoring another person. Somebody said, what about those that are not on X? That's the thing. Telegram needs to create something like that. Because Telegram now does not have that kind of feature where I can do something like that. All right? Telegram does not have that kind of feature where I can do something like that. So I think X will be better. That's the only option we have. If you're not an X, just create an X account. Twitter picker does not care if you have followers or not. It can randomly pick you. All right? That's how it will work. So for the cash, when I just do it, I ask you to drop your account number, you drop your account number. I'll just give as many people as I can. Yeah, I'll give as many people as I can. And well, that should be it. That should be better. Boss, does your setup work on all pairs? It applies, it comes out in different ways. In gold now, I can be trading mitigation. The point is, what do I trade? Majorly liquidity and all, right? That is what I'm looking out for. The way I approach the market is very, very different from the way others do. It's very, very different. What you see me post on Telegram is actually different from how I approach the market. When I'm done and I get my entry and all, then I'll just should I say structure it the way I want to structure it for you guys and just post it there so you see. But that's not really how I approach the market. It's very, very different. All right. It's very, very different. And there are a lot of things I consider and I don't put them there so that there will not be a lot of lines. All right. So thank you guys for staying tuned. Tomorrow morning, I think 9 a.m., I'll make a post about this call. Then just go under the comment section and do something else. Whatever it is I actually come up with, then I'll just credit people randomly. That's good. And somebody just asked one of the best questions. Are we not supposed to increase our risks as our account grows? I love this question very, very much because a lot of people make mistakes. They don't know when to scale up and when to still be consistent with a particular risk amount. Are you not supposed to increase your risk as your account grows? Good. Now, this is what I do. If I'm trading a $500,000 account and I'm risking $20,000, $10,000, $50,000 on this account, I can stick to that $20,000 if I have a target. Now I have an account now that I'm targeting to hit $1 million. I'm going to stick to that particular risk amount till I get to that target. Then when I get to that target, my account has grown, right? If I want to take profit, I take. If I want to withdraw profit, I withdraw profit. If I still want to continue growing the account, I continue growing the account. But that was when I was leveling up. Now, once I reach a target, I withdraw profit and I repeat the same thing again. That is how I do it. But if you are leveling up, let's say you are growing, yeah, you get to a particular, let's say you are risking $50 per trade on a $1,000 account. When you get to $10,000, let's say you manage to grow your account to 10,000 or to 5,000, you don't want to be risking $50 anymore. You want to increase the risk. Like on a $10,000 account, risking $500 is going to be good. Why? Because you are growing. And when you get to $100,000, you don't want to be risking $500 again. Why? Because you want to grow. You can be risking 1,000, you can be risking 1,500. You just have to understand your own risk appetites, and that is it. So thank you guys. See you guys tomorrow morning when I make the posts, and give out whatever it is I'm giving out, and as well the prop accounts to. I'll share it. It's going to be just 5 prop accounts, right? 5 prop accounts. I wish there is a bot that can pick randomly. I'm just going to pick from this listener. So what you are going to do is screenshot this particular channel, this particular call right now. So if I randomly pick you and I'm like, were you on the call? Just show me your proof. I send it to you. It's simple. So make sure you just take a screenshot from this call right now, and that is it. So thank you guys. See you guys tomorrow and next week. The same thing. And yeah, I forgot. If you benefited from this call and all, give us a shout out. Give us customers review. Nobody paid me, so it's not like a customer review thing. But sure, if you benefited from this call, give us a shout out online and all. So good luck.